Hey everyone, and thanks for jumping back into the cryptoverse. Today, we're going to talk about Bitcoin, macro level volatility. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out the Telegram channel, which you can find a link to in the description below. We also do have the Black Friday sale on the premium list that'll run through the end of the month. You can find a link to that in the description below as well. Let's go ahead and jump in. Macro level volatility is very important in understanding not only where Bitcoin is today and what are some of its limitations in terms of short-term price appreciation, but also in terms of understanding where it's headed over the macro scale. I would argue that Bitcoin is the soundest money, but sometimes it can leave you wondering what's going on if it can drop 55% in a few weeks like it did earlier in 2021. Bitcoin right now is in this long price discovery mode that has essentially been lasting the last 11 years. Now, eventually, the prices will stabilize a lot more, and ultimately, one cycle will become completely indistinguishable from another cycle. You have to imagine that as time goes on, if the cycle ROI continues to diminish, then at some point the cycle ROI just gets so close to the x-axis that it becomes somewhat subjective to even talk about cycles. But for now, I still think they're very much in play, and we will see a lengthened cycle this market cycle. And we'll be able to track the next one as well. But one of the things I wanted to talk about is if you take the percent difference between the maximum and minimum price of Bitcoin discretized annually, this is what you get, right? This is what you get. And what you notice is while the dots are sort of all over the place to some degree, but what you will notice is that it seems like there is a downtrend. It seems like there's a downtrend in there somewhere. The reason why that's important is because it makes sense in line with diminishing returns. Diminishing returns should not be a scary word. It is just the way things are, right? It's just the way our world works. Diminishing returns is a thing. I have two screens in front of me. Two screens. I have my laptop screen, which is where I record all these extremely high quality production videos from, but I also have a monitor over here. And I like to have both screens. If I were to have a third screen, probably would start getting diminishing returns on having all that extra real estate on my desk. A fourth screen, fifth screen, at some point you get diminishing returns. Okay, it's the same thing with investments. Okay, eventually these things are going to experience diminishing returns. But the nice thing about Bitcoin is that if we had to pick, one cryptocurrency to stand the test of time, Bitcoin would be that cryptocurrency. Now, I would argue Ethereum's basically right up there with it, but Bitcoin would be that cryptocurrency. So while, yeah, maybe you're not going to see Bitcoin go up 1,000x in a year, okay, it will likely continue to trend up with time, and it's a much safer investment. Of course, none of this is financial advice. Now, when we look at this, the maximum, the percent difference between the maximum and minimum, one of the things you'll notice is that this is a percent, by the way. One of the things you'll notice, this is a logarithmic scale. Okay, so this is 10%, 100%, 1,000%, and 10,000%. Okay, now you have to remember though, that 1,000%, while some of you are probably thinking, oh, 1,000%, that's 11, or that's a 10x. In fact, 1,000% is 11x, because if 100% is 2x and 200% is 3x, then 900% would be 10x and 1,000% would be 11x. Okay, keep that in mind. But the point is look, we are experiencing generally decreasing percent differences between the minimum and maximum prices of Bitcoin discretized annually. And we would expect that, right? What you've noticed this year, everyone's been promising all these crazy parabolic moves in Q4 that's going to take Bitcoin to $300,000. Well, first, I should say they promised it back in September. That didn't pan out. Then they shifted it to November, December. Clearly, that's not panning out. No 300K Bitcoin by this year. And again, they're going to shift the goalposts, but that's what they do best, right? That's what they do best. They're going to keep shifting the goalposts. But the reason why this is important is because it shows that, to get to these insane valuations in a single year, Bitcoin would essentially have to go to the top of the downtrend line, which is somewhat unlikely considering I haven't been to it in a long time. Now, if you're having trouble following what I mean by all this, take a look at the market cycle ROI of Bitcoin. You look at cycle 1, cycle 2, and cycle 3. Cycle 4 is all the way down here. You can imagine a theoretical future cycle 5 that's even closer to the x-axis. Cycle 6 would be even closer. So at what point does it become somewhat irrelevant? And additionally, if the cycles lengthen, you have to wonder, right, at what point does it become irrelevant? I don't think it's irrelevant yet. But at some point, it's going to become extremely subjective as to what constitutes one cycle versus another. Okay, I still would argue we're going to have bear markets. I still would argue this is we're having a lengthened cycle. Next cycle is probably going to even be longer than this one. But the point is to say, when you look at this chart, it's spanning decades. Okay, this goes out to 2050. This is 2010 to 2050. We basically filled in 1/10 or 1/5 of it, right? We basically filled in 1/5 of it so far. So, I think that it's certainly important to think about this stuff because it will give you a general idea of where the asset class is headed. Now, what if you look at this chart and you try to draw that general downtrend line? It's not a perfect downtrend because it's not like this one came back up to touch the top of it. But generally speaking, the annualized percent difference, or the percent difference between the maximum and the minimum prices discretized annually shows that it is a downtrend. And that right now, we've only experienced a 100% or just over a 100% difference between the minimum and maximum price of Bitcoin in 2021, which might sound crazy. But remember, Bitcoin started the year off at like $28,000 or $29,000, and the highest price it's reached is $69K. This is based on daily closes, which I believe was actually around $67K. But look, you can see that despite all the crazy claims, it just hasn't been that great of a year for Bitcoin. Now, I know people are going to say, well, we still have December. And you're right, we could see a breakout. But I don't think we're going to 300K this year. All right. I doubt we make it to even. I honestly would be surprised if we made it to 100K this year. I think it's a lot more likely that would happen in 2022. So we look at this, and what do we notice? Well, we could say draw a line at 10%, 100%, 1,000%, and 10,000% and try to figure out what are some key milestones as the decades move on. It would suggest that if we could go back up to the top of the uptrend channel, that we could still experience a 1,000% move as early as 2026 in a single year. It is certainly possible that happens, but I would argue that getting back to the uptrend channel there, or the downtrend, the top of the downtrend, is probably unlikely, considering it would have to happen perfectly. Now, one of the ways it could happen is if you think about it, things would have to work out pretty well in terms of timing. Imagine Bitcoin had its capitulation not in March of 2020, but let's say it capitulated in January 1st of 2020, or let's say December 31st of 2019, and it started off the year in 2020 at say $3,800. And then you can imagine that if the higher prices of 60K and whatnot actually got pushed back to the end of December 2020, then you can imagine a year where Bitcoin could have theoretically gone up more than 10x. But again, this is discretized annually, so it would have to work out pretty well. So the chances that Bitcoin is able to go up, say, 1,000% or 11x in 1 year is relatively unlikely. But this channel would suggest that it's theoretically possible. I certainly would not take this to the bank. I guarantee you no one's going to cash it in. One of the things you can look at, though, is that looking at this chart, you can say, well, look, even as early as, say, 2016, 2015, we were seeing percent differences between the minimum and maximum price of Bitcoin as low as 100%. In terms of the percent difference between the minimum and maximum price of 2021, it's most similar to 2016 and 2015. 2020 was a lot higher. 2021, not so much, right? Not so much. It's all the way down here, close to 100%. But if you were to continue following this out, and you could say, well, could we ever reach a year where the percent difference between the maximum and minimum price of Bitcoin in a year is 10%? Yeah, I think it's possible. But when would that happen? Honestly, it probably won't even happen until the 2030s, when we would actually see the minimum and maximum price difference of only 10%. So you're still looking at arguably a decade before annual volatility gets that low, where the maximum price of Bitcoin in a given year is only 10% away from the minimum price. Okay, but even then, you could go out as late as 2040 and still theoretically see a year where Bitcoin's able to go up 100%, even 2041, 2042. Imagine the price of Bitcoin in 2042 or 2041 is, I don't know, let's just say $1 million or something. And theoretically, it could go to $2 million in 1 year based on this downtrend channel. But again, this is sort of like a maximum limit. If it reached that level, it's probably going to be all she wrote for that year for Bitcoin. But anyways, I thought this was useful, not in terms of taking this to the bank and trying to cash it in or anything, because you can easily draw the downtrend channel to say ignore this data point and then just connect these two and it goes down a lot quicker. But the point is to say that if you look at this stuff over the macro scale, volatility is decreasing, okay? We're not going to always have, 55, 80% drops in a year, okay? Eventually, as time goes on, that stuff should work itself out. One of the advantages of diminishing returns is that typically the downside isn't quite as bad. And if you're looking for a long-term investment, Bitcoin is a relatively safe play over the next couple of decades. And you're going to have periods of time where the price could depreciate 50% in a relatively short period of time. But at the end of the day, the people that stick with it and keep allocating to the asset class, specifically to say Bitcoin and Ethereum and maybe a few others, of course, over the macro scale, but those are higher risk plays, your portfolio should generally trend up with time. Okay, so keep that in mind. Remember, day trading can get you wrecked. People who go long and short, they get liquidated both directions constantly. And you have to think that Bitcoin, if you think it's going to trend up with time and you don't need the money today, then I would argue it makes a whole lot of sense from a macro perspective to recognize that, look, even though we can have these drawdowns, there's still years where the potential upside is still several 100% in a given year, from the minimum to the maximum price. So hopefully this video has been informative. If you guys like the content, make sure you subscribe to the channel. Give the video a thumbs up. Also, check out the Black Friday sale on the premium list. You'll get access to weekly reports and videos, the Telegram alerts channel, the Telegram chat room, the risk dashboard. We have updated charts live that you can watch, trading view indicators, and more. You can find a link to that in the description below. That sale will end at the end of the month. Lock in the low rate. You'll keep that rate as long as you do not cancel. Thank you for tuning in. Subscribe. I'll see you next time. Bye.